Welcome to the latest Money to the Masses Roundup video. It's the 24th of October. As usual, I'm going to go through some of the big stories of the last 7 days, mention one or two to look out for in the next 7 days that should be of interest. Now, I'm going to do this on a Monday from now on because I think it works well for me primarily, but also you guys because it gives you a bit of a taster of what's happened and a bit of insight and then what's to come. So a couple of stories we're going to deal with this week are going to be annuities, gilt, a bit of Brexit in there, tax, and then ultimately the outlook for the UK economy. So a quick whistle-stop tour. Now, let's start with Brexit. What's happened with Brexit? We're going to be talking about this forever, it feels like, certainly until Article 50 is triggered. Now, the thing with the Brexit vote is it's caused a lot of uncertainty, and one of the biggest uncertainties is about how the UK economy will do. Now, anybody who's a low risk investor out there, and if you've had an advisor or you do this on your own, you will probably hold something called a bond or a bond fund, and also within there you may have something called a gilt. Now, these are effectively loans to companies in the case of a bond, or the UK government in the case of a gilt. And so it works like an investment because you can buy and sell them on. So most people don't actually realise that in essence they are loans, but you actually just invest in these things, and they're meant to be fairly low risk because it's all about whether you get repaid, and it's, like I say, just a loan, people trading them. Now, what's been interesting, there's been a sell-off in the bond market, particularly in the UK. Now, why has that been? Two things really. First of all, there's been questions raised over the UK government's creditworthiness going forwards because of the idea that a hard Brexit may in fact cause the UK economy to stutter. Now, the other thing is there's been a big fall in the value of the pound, and while the FTSE has taken off, and everybody may be thinking that's wonderful, but the reason it's taken off, as I've covered in a previous video, is because the pound's low, overseas earnings of companies in the FTSE 100 are boosted. Equally, it's the exporters do well because their products are relatively cheaper to the people who are abroad who buy them. But for the rest of us, a weak pound means that the things we import become relatively more expensive, and now we're about 16% below in terms of the pound against the dollar, and anywhere else we want to import from, maybe it's Europe. Now, prices of petrol are going to go up, the prices in the shops are going to go up, and we saw last week that in fact inflation had jumped to 1%. Now 1% doesn't sound a lot, but given where it was previously, that was a big jump. So is this going to be a spike in inflation? Mark Carney, the Bank of England governor, seems to think so. So it's something to watch out for. Now, while we're on the subject of things like bonds and annuities and things like that, one of the things I want to have a chat about as well is, sorry about that, was my phone buzzing there, very rude of me, I'll turn it off. One of the things I wanted to talk about as well was the annuity market. Now, one of the big stories last week was the UK government did a turnaround on the possibility of a secondary annuity market coming in. Now, you may remember pension freedoms. You don't know the full ins and outs. All you need to know is that you can pretty much cash in your pension once you're 55 with tax implications and take your money and buy a Lamborghini, as so the Daily Mail and the likes claim people would. They never do, but that's what they thought. It made good headlines. But of course, what George Osborne realised was lots of people who were tied into annuities. Now, an annuity is what traditionally used to happen when you got a pension pot you'd saved into. When you get to retirement, you then had to buy an income stream, an annuity from an insurance company. Now, if you were locked into that annuity, and if you died, your money typically would die with you. So George Osborne decided he wanted to let people who had existing annuities get in on the new pension freedom game. So what he did is he came up with the idea of a secondary annuity market whereby they could then sell their existing annuities for cash them in effectively, because there is no way of doing that at present if you have an annuity. Problem is that, as I pointed out at the time, and so did many others, is that a secondary annuity market would actually mean that you were going to sell a bad or poorly valued product in the first place that people were likely to have been missold or certainly misinformed about, and they were disgruntled about, to sell it to somebody else in the secondary market who probably would still be an insurance company, and who would probably give them even worse value. So two wrongs don't make a right, and ultimately you were going to be just lining people up to be missold to. Westminster got the idea and scrapped that plan, and the secondary annuity market isn't going to happen. Now what they need to do really, if this is being a systemic mis-selling going on, then they really need to do a full-scale review. Now the other piece of news, tax related, the married couples allowance. There's an allowance that was brought in. Go on to moneytothemasses.com and type it into the search bar. But there has been a new married couples allowance that allows you to transfer part of an unused income tax allowance of a spouse to the other. And a quarter of people who are entitled to it do not claim it. So according to HMRC that is. So go and have a look on moneytothemasses.com and find out what you can do about that. Now the other story is for this week is to look out on Thursday. We're going to have the first set of official UK economic numbers, GDP numbers for the UK since the referendum. Now this may sound, well, not very exciting, but trust me, it is, because there's going to be a lot of news about this. You may have seen headlines in the last few months about the economy, jobs, all these things, and lots of that stuff has been based upon surveys. This is the first time we're going to have the first official figures for what's happened in the quarter since the referendum and whether the UK economy is doing better or worse than expected. So there's going to be a line in the sand. These figures are revised in the coming months, but on Thursday keep an eye out because it's going to be the big news story. You're going to have either the Leave or the Remain camp shouting and jeering the other side depending on what the figures are. It's very early days, so I wouldn't get too carried away. As ever, that's the end of the roundup. Do get in touch if you've got any questions, any ideas you'd like me to cover. Money to the Masses is the Twitter feed. You can get hold of me on Money2 with the number 2 Masses, and of course don't forget to listen to the podcast. And until next week, have a good time.